Hey replay viewers, sorry you missed us live, but if you have any questions, you can always holler at us on Twitter. We're at Humor Homemaking over there, or you can go to humorhomemaking.com and click on the contact tab at the top to send us an email, and then we will get to you, get back with you as soon as we can. So thank you guys for hopping on today, and I hope that we can, oh thank you Mackenzie, I hope that we'll have a good time with our tractor and learning all we can about mortgages. So I think I should have a pretty good screenshot. Whoop. Okay, there we go. Okay. Hey Casey, look, it's Casey.
Aww.
Okay, so before we get
party, I love that.
I'm trying to get this right. I will have to be a little bit closer to the phone this time. So, before we get started, I just wanted to tell you guys that somehow we made it to the, hey, I'm so glad you made it. We made it onto the trending list. And because of that, I have been severely spammed. And, and I'm not going to be able to catch them all. And I'm sorry, and I apologize for the profanity and all the other stuff that you're probably getting ready to see, and I can't do anything about it except try to block as I can. So while Barry's talking, I'll be blocking, and if I accidentally block you, because sometimes it goes so fast, hey Kate, sometimes it goes so fast I just can't catch it. So if I accidentally block you, oh hey, it's Jeremiah, he's on there too. If I accidentally block you, please tweet me or send me an email. I'm Stacy@humorhomemaking.com, and I can undo that. I accidentally did that earlier when I got flustered earlier today. So if I get flustered, I apologize, but hopefully Barry
I'm just not going to read any. I'm just going to talk.
And I'll be blocking, and that's why I'm so much closer to the screen, because if I sit back here with him, I can't really
And if I try to do it, it looks like this, and that's just weird.
Hi, I'm Stacy, and this is Barry, and we are both from humorhomemaking.com, where we teach other people how to, what do we teach other people? I almost said how to live debt-free, but that was StacyMakesSense.com.
Well, see, we work on trying to help you manage your home
without losing your mind. Yeah, don't talk, Karen. I won't accidentally block you. So I had a request from Amira Martin, so if somebody could put her, oh wait, don't put her up there. I don't want a whole bunch of people hopping over. Okay, Amira asked for this, and so we're going to talk about mortgages because he's the man, and he's the one who does the counseling, and he knows the information. So he's going to give some basic information on mortgages and renting, and then we will take questions at the end. And so if you have any, you can keep them till the end. So I said we were going to talk about renting too, right? Yes.
We will, yeah.
Okay, so he's going to talk a little bit about mortgages because Amira is getting ready to purchase a home, and it is a little scary. Yes. So she wanted some information from the financial man up in here. So
okay, let's talk first off about mortgages, because I'm going to give some basics, and I want to make sure that everybody's on the same page. First off, I'm primarily talking to people in the U.S., and I'm going to talk mostly in percentages because...
We love you too, Kate.
Yes, we do. But I'm going to talk in percentages mostly because I was talking to somebody earlier this week who their house is well in excess of $1 million. And around here, a home well in excess of $1 million is very rare because we live in a place in the country where living expenses are dramatically different as far as housing goes. So I'm going to have to talk in percentages a bit. All this boils down to what you, notice that finger you, are able to do based on your income and where you live. So let's talk a little bit. First thing I want to say is, do you have to have a mortgage to own a home? And the answer is absolutely not. And the second thing is, I always am coaching and counseling people because I want them to live without debt at all. 100% debt-free, including their home. So there's a few ways you can go about that. Some people say, well, you always are going to have a house payment. Well, I know a lot of people who are completely debt-free and they choose to rent. And there's nothing wrong with renting. In fact, I know some people who they really should rent. There's some rules that you can go into, but really think about it. If you're moving,
renting is not evil.
Not at all. If you're moving all the time, why would you buy?
And some people just prefer to have someone else handle all of that stuff instead of themselves with their home when something goes wrong.
People say, "Oh, you're throwing your money away." I very much believe in home ownership, but at the same time, it is not just the only option. Okay, is it a good one? Sure. Is it the only one? No. So
should you mostly drive Ford? Absolutely. Should you only drive Ford? We have a Honda.
Yeah, it's all good. So let's talk about mortgages now with that whole rent piece out of the way. So if you are currently renting,
Jessica, we were talking about you.
And if you are currently in the situation where you're looking at getting a mortgage or have one, let's talk about some definitions. I know we got to get that boring junk out of the way first, but let's do it. There are things that you'll hear such as fixed rate and adjustable rate. The only difference is the interest rate going to stay the same over the course of the loan, or is it going to change? It's that simple. So you're looking for, rule number 1, a fixed rate mortgage. If you're going to have one, get a fixed rate mortgage. Why? Because then the bank is taking all the risk of interest rates changing versus you. Okay? So if you hear the term adjustable rate mortgage or ARM, stay away.
I just got tickled. That guy just said, sorry.
What did he say?
He said, "Do you like sex?" And I wanted to say something like, "We have 3 kids and I'm pregnant." Okay, onward.
Mortgages.
Anyway,
so don't get an adjustable rate mortgage. Why? Because you're taking on the risk of what happens to interest rates, and generally they don't go down, they go up. We are in a very odd place in history where interest rates have gone down, stayed down. Okay, so let's stick to that one. Number 2, well, how much of a mortgage can you afford? Well, that's a really good question, because there's a couple ways you can look at this. Number 1, you should never have a mortgage that when you're looking at PITI, principal, interest, taxes, insurance. Stacy's about to yawn.
No, I wasn't. I was laughing at the guy that asked about
she's going to have a good time then. When you look at how much your payment is, plus the interest that you'll pay, plus the taxes, plus the insurance, I tell people to stick below 35% of their take-home pay each month. If you're just talking about principal and interest, so how much is this house going to cost me? Well, if you're just looking at the loan amount for a straight-up principal and interest, I say 25%. Why? Because if it goes higher, you're going to be poor. You're going to be paying that house payment every month, and it's going to drain your budget. So there's some percentages. Next piece of that, still talking about definitions, sorry to have to go through this. When you're talking about how long of a term of a loan, you should never get a fixed rate loan is what you're looking for. You should never have it more than 25 or 35% of your take-home pay, depending on what number you're looking at. And you should never have it for more than a 15-year mortgage. Why? Because if you have more than a 15-year mortgage, then you're going to be paying that thing a long time. Remember I said my goal is to get you to where you have zero debt?
A lot more interest.
Yes, and you end up paying a lot more interest. Now, you'll have a lower house payment. Great. But you'll be paying a lot more in interest. And so when I say, or when people talk to me and say, can I afford this house? My answer is not how much did the bank approve you for, because they'll approve you for way more.
Yeah, when we purchased our first house, they approved us for a lot more than we were looking for.
Yeah, they approved us for about half of my take-home pay every month, and that's nuts. So a lot of people will say, and I see the question about, what if you do a 30-year and pay it off sooner? Guess what? A 15-year mortgage always pays off in 15 years. A 30-year probably won't, okay? So if you're in a 30-year mortgage, it's not evil. It's just I'm recommending that you stick to a 15-year or less. If you're on a 30, in fact, the first house we bought, we did finance it at 30, and we paid it off in 8. But it's because we kicked our tails and really went at it. So a 30-year mortgage, again, is not...
Sorry.
Went at it?
Yeah, went at it.
Are you?
Do you
Her mind is in the gutter.
I can't help it. Do you like Kiss? I'm sorry. I'm just... No. Onward.
So, 15 year is the better bet, or less. I mean, you don't have to go 15. If you can afford a 10 or a 5 or whatever, go for it. The least amount of time, because the goal is to suffer a little while now so you can be out of debt later, okay? Remember I say in almost all these scopes when we talk about debt that debt equals risk, and there's no exception to that equation, so your goal is to have as little debt as possible for the shortest amount of time as possible, okay? So, somebody just brought up about the whole point of refinancing. Yes, if you're in a mortgage right now that doesn't meet the criteria I've talked about, maybe you should look at refinancing. Why? Because rates are really low, and they probably aren't going to stay this way for a long time. The closing costs are going to be something, but if you're going to stay in that home for another year or two, then you'll make the money back if you can save at least 1%. And third, it really puts you on the right track to pay the mortgage off early. So there's some really, 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 really basic stuff. So, there's a good question about bankruptcy. How soon can I buy after bankruptcy?
Okay, Liz, holler if you have any questions.
It depends on what chapter you filed. And really, it depends on a lot of other things, but here's some general rules of thumb. If you filed a Chapter 7 bankruptcy, which is the one that's on there the longest, then you are basically... 7. Oh, yeah, you filed Chapter 7. Then if you file Chapter 7, then you basically are looking at 10 years after your filing date, and that's an important date, the filing date, before it's not going to be a real black mark on your credit anymore. That said, there's such a thing as manual underwriting, which doesn't just say, what's your credit score? Oh, it's junk. Never mind. You can't have a mortgage. Instead, what you would look at is going to somewhere. I know Dave Ramsey recommends Churchill Mortgage, and there are plenty of others.
Yeah, there's not just that one.
Yeah, but instead of them pulling your credit report and saying, oh, you have a bankruptcy, and oh, your credit score is such and such, and saying no, then what they do is they start to ask questions. But now if you're 6 months out from a bankruptcy, you can forget it. If you're a couple of years out, maybe, but 3 is like a bare minimum, and 10 is when it's not going to be an issue on your credit report anymore. What should your credit score be? Gosh, that's a whole different discussion. I don't care what your credit score is, really. I don't care at all. Why? Because if you do the right things with your money, your credit score will take care of itself. I mean, there's a range, and there's all these things you can do to help it and hurt it and blah, 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 blah. I used to work in the credit card industry, and we looked at credit scores all day long. But the reality is, I don't care what your credit score is. I don't even know what mine is. I haven't looked. I don't care. It doesn't matter. So, but when you're trying to get a mortgage, yes, you want to have good credit, but don't do things just to improve your credit. So that's a good question about bankruptcy. Another thing that people often want to talk about when it comes to paying off your mortgage is, okay, so I've paid off my mortgage,
Gina,
or I want to move to a bigger house, or whatever. How do I do that? Well, the biggest thing you need to make sure of is don't buy too much house. Remember that house poor thing I talked about earlier? When we first bought our first house, it wasn't all that. I mean, our mortgage was $67,500 or something. It wasn't all that big of a mortgage.
We bought a townhouse.
We bought a townhouse, exactly. So there you go. That you don't need to go there. But another thing that people will get hung up on is trying to buy the most house they can possibly afford when they look at all those numbers I gave, but not considering the down payment. There's another major thing that comes into play that'll cost you a bunch of money if you don't pay close attention. And that is...
PMI.
Oh, good. She knew. Good for you. Which is, basically, it's mortgage insurance.
I didn't know there was a test.
I wasn't really planning on it.
Oh, okay.
I was almost trying. No. PMI is basically when you...
I have heard that. That's why
when you buy the house...
That's where Amira lives. That's
and
why
you
she
don't
asked
put 20% down on that house, then you basically have to pay foreclosure insurance or foreclosure risk insurance. All you're doing is paying for the bank in case you go bankrupt or in case they have to foreclose on your house, that it won't be as bad for them. And that gets expensive. It can be as much as with our first home we did have to pay it. It's like $60 or $70 per $100,000 that you finance. It's a lot, and it can be very, very expensive, and it's just money being thrown away. So all those other rules that I tossed out, be sure that you pay close attention. I'll see that one. Be sure that you pay close attention and be able to put 20% down. Now, if you look at a perspective of all these different loan types, I'm giving general rules. Somebody just said, hey, what about a VA loan? There's VA and FHA and there's all kinds of specialty loans, even the ones that have been out there forever. Some of these rules will apply. Some will be just a little different. I don't want to go into those details because it depends on your state. It depends on whether or not you're a first-time home buyer. It depends on all kinds of different things. So let's not get into that level of detail. If you're considering a mortgage of any type, keep those types of things. We'll talk about house poor again in a second. Think about all those types of things, and before you get involved in a specific type of loan, ask, well, what if I did this type of loan? What if I did that type of loan? Because each has its pros and cons.
Thank you, Casey.
We brought up house poor earlier. What that means is you make plenty of money, but you bought such a big and expensive house that you pay so much in a mortgage every month that by the time you've paid for it, you have almost nothing left. So again, that's why I say 25% of your take-home pay if you're looking at principal and interest, 35% if you're looking at principal, interest, taxes, and insurance, or PITI, P-I-T-I.
It's a pity.
It is a pity. It's just a sad pity. So there's the very basics. And I've seen people popping on here and saying, oh my gosh, a cheap house here costs $14 million.
That's sad.
Yeah,
that makes me sad.
It's really, man. Houses can be very expensive.
We live in a, we don't live in a poor area.
We live in a place
Casey
where
lives here. It's just
the cost of living is much
low,
cheaper here than other places. But also are wages. If you consider wages,
wages are
wages are way
lower.
down. So there you go. So now,
nice to meet you.
There are the very basics. What questions do you have?
It's okay to rent.
Nothing wrong with renting.
Renting is great. So, especially, if you have filed bankruptcy and you can't, there's absolutely nothing wrong with renting. And in fact, like I just said, sometimes there's a lot more benefits to renting because you don't have the upkeep of your house. What about building
onto your current house? Can you be more specific? Do you mean should you take out a second mortgage or refinance or something to add on to your house? Is that what you mean?
We are also hoping to build eventually, but we're happy here for now.
Yeah, we're going to build a different house, not onto the existing one. And that's a whole different thing because usually if you're buying a house, then you get a mortgage. If you're if you're building a house, you get a construction loan.
Robin says, why do mortgage companies sell your loan?
Well,
make sure to ask that again in a minute, Pinky. And I can't remember your name right now, Pinky. I'm so sorry.
Banks are out to make money, and that is not evil. In fact, the company I work for now, which is not a bank, one of our guiding principles is that profits are essential. And I agree, profit. If you don't have a profit, then how do you pay things? How do you grow? So banks are out to make money, and so one of the things that banks often do to make money is they'll sell loans, or another thing they may do is they may have too much debt on their books, so they have to sell some of that debt to clear up their books. They have Fed requirements they have to keep up with and all that kind of stuff. And I'm not an expert on that at all. But when we got our mortgage on our original home, it was sold 3 times, I think, before it ended up with City Mortgage as our final lender, and it stayed with them for like 6 years or something. So.
And somebody wants to know the quickest way to pay down a mortgage, but we're actually going to do a scope next week on how to pay down debt.
Yeah.
So we'll try to cover that then.
Fast.
Yeah. And then
I can sum that up pretty quick though. What's the fastest way to pay down your mortgage? It's just like any other debt. Commit to getting off of debt. Commit to getting out of debt entirely and say, okay, what can I cut out of my expenses? What can I do to increase my income? That's simple. And then wear it out. Pay all the extra you can, every penny.
When you type in a comment, make sure you copy highlight and copy it in case I don't grab it. And so there's Pinky. Allie.
Okay, Allie. What's the best route to take with low credit?
So that you can put it up again if we miss it.
Low credit, the best thing you can do is go to a bank that offers manual underwriting. Manual underwriting.
That will not be a national bank.
No, that can be a local credit union. That's not going to be Bank
of America or...
No.
No.
It'll be a small local bank. It'll be a credit union, something of that nature. And what they're going to do with manual underwriting, sorry, I'm from the South, so I say underwriting and people think R-I-D-I-N-G, but it's W-R-I-T-I-N-G.
They're used to me.
Manual underwriting means that what they're going to do is they're going to look at all of the various things on your credit history and then do an interview with you and say, okay, well, if you're renting now, are you always paying your rent on time? Are you always paying your other bills on time that maybe don't show up on your credit report, that kind of thing. That's what you're really looking for. If your credit score is low, you can sometimes still get a mortgage. The issue is you're going to have to pay a higher interest rate, and that's bad. Your goal is to pay as little interest as possible because that's money being thrown away. If that you can get a lower rate, get a lower rate. I mean, it's that simple. So, what was the other question you said that Pinky had?
That was her.
Oh, okay. Okay, great. Good.
Allie. Her name is Allie. Why will the bank not refinance?
Bought 10 acres with mobile home. We pay 8%. No bank will refinance. Why? Well, partially because it's my guess is that because it's a mobile home and land. Mobile homes generally decline in value, and land is sort of a static. It's difficult. So it may be a credit thing. I can't really tell you. It's possibly because it's a mobile home and land.
Did you try somewhere else?
And it's very possible that it's because of credit score. But yeah, ask around.
Yeah, I would try somewhere else. If you've only tried one place, you should go to at least 3 places.
Yeah, and that's true. It's probably because it's a mobile home, and mobile homes are very difficult to refinance because they're depreciating assets. All that means is they go down in value rather than up.
Someone asked a question. Now I'm forgetting it.
When you say
rent.
you've tried every bank, ask why. You have a right to know why you were declined, by the way. Ask.
Jacqueline says we have a low mortgage rate, and you were advised not to pay it off?
Oh my goodness, I should have thought to talk about this. There
weird.
are plenty of people who are financial experts who will tell you it's good to keep a mortgage because you get to deduct that off of your taxes. Oh, come on. Let's do a little math. Let's say that you're in a really high tax bracket and you're at a 30% tax bracket, okay? Let's say that you pay $10,000
sorry, go ahead.
Let's say that you pay $10,000 in mortgage interest this year, and if you're in a 30% tax bracket, that means you save $3,000 in taxes. You gave $10,000 to the bank to save $3,000 from the IRS. Does that math work?
Hey, I know this answer.
Hold on. It's a good thing I've got a calculator.
No.
Hold on. Carry the 4.
The answer's no. The answer's no.
She's right. The answer's no.
I'm not too good at math, but I know that.
I have yet to find any reason to keep a mortgage at all if you can pay it off.
You need at least 20% down to avoid private mortgage insurance.
Yes. Absolutely. If you're going to buy a house and want to avoid PMI, have 20% to put down. I know that's a big chunk of money, but have the discipline to at least do that.
And I know somebody else asked a question and I'm not remembering right now.
One of the questions about a realtor, but I didn't see what the full question was.
Oh, that's right. She asked, if someone says they're debt-free, does that usually include their mortgage?
Well, Dave Ramsey will let you go on I guess he still does.
Wait, read that from Kim.
We try to keep rental property mortgages at half the rent income.
Does that sound right? Okay, now finish the other one. Okay. We'll go back to that one.
When people will come on Dave's show and scream, "I'm debt free," then a lot of times they haven't paid off their house, but they are debt free except for the house. I like to say you're totally debt free, and I mean totally debt free. But I don't know. Do you still owe a payment every month? The answer is yes. Then to me, you're in debt. So to me, you can't say you're debt free. But a lot of people still go on because that's the one. That's the one debt that Dave was cool with, is the mortgages. Absolutely. And it's very difficult, almost near impossible to start out with paying, I mean, you're going to have a hard time buying a house with cash.
What do you do if your rate's higher than current, but it's probably worth less than you owe?
I don't understand that question.
The house is worth less than you owe.
Okay. Okay, so you're upside down in the house. So you bought it when the times were really good, and now so you can't really refinance. You're sort of stuck. If you're upside down in the house, you're sort of stuck unless you want to save up a big chunk and put that down. Otherwise, you're just sort of stuck. A 5-year ARM FHA that recently. If you cannot afford to refinance a 15-year from the ARM, then yes, do the 30-year because a fixed rate mortgage is much better than an ARM. Absolutely.
I didn't catch that from Allie.
Back to the question that somebody said, hey, we have rental property and I keep the mortgage at half of what the rent is. Is that safe? Debt equals risk, and there's no exception to that equation. The biggest reason we don't have rental property, that we don't personally own it, is because we have absolutely no desire to own property that we cannot own fully.
And Dave will tell you that too.
I think real estate's a great investment. It's wonderful. I have family that owns quite a bit of real estate, but we don't buy it until we can pay cash. And if we can't pay cash, we're not going to have it. So I don't want a mortgage on any investment.
Oh, Lexi, I didn't know you were in a rental.
Hope that helps. So what was the question?
I don't know. I forgot.
Is there a type of loan to buy a house that doesn't qualify for conventional or FHA? It's old. Well, you can go back to manual underwriting. You can go to a traditional type of mortgage. A mortgage is what they generally call a loan on a house, but you could also just do a standard loan.
We don't have a problem whatsoever with mortgages.
No.
No, that's not what this is about.
Mm-mm.
So.
Couldn't sell without losing. Okay, so you still have the house, but kept it because you were going to lose a bunch of money. There are several people in that situation. As long as somebody's in there renting it, life's good. If you've got a good tenant, life's good. Don't worry about it. The issue is it's a responsibility, it's a cost, etc., etc.
But just let me rephrase. We don't have a problem with people. Read that question while I'm talking.
We refinanced a home. Do you recommend doing 15-year with biweekly payments?
We don't have a problem with mortgages or rent or anything like that because, no, we don't have a problem with mortgages at all. But we are of the opinion that if you have one, you should try to pay it off as soon as you can.
Get out of debt. I mean, there's... Okay.
And then we will be so happy. I might make you a loaf of bread, and I would mail you a loaf of bread.
When we paid off our house, one of the first people I told outside of family and all that was a guy that I was working with at the time who was a multimillionaire. And he said, and I quote, Barry, when your house is paid off, you can work for peanuts. And it's true. When you have zero debt, including zero mortgage, you don't need nearly as much income to make it. It's that simple. If I hated my job, great, I'll quit and go flip burgers. It's cool. I mean, you don't have to have the same job, the same income level, if you don't have the same expenses. It's that simple. So let's see here. Somebody asked a question and I read it and I'm like, okay, I'm ready. And now I've forgotten.
Yeah, it's really easy to forget, especially when you get distracted by people.
15-year
talking.
ARM. Something about a 15-year mortgage. Oh, biweekly payments. If it costs you money to do biweekly payments, don't do the
Maybe you should say what biweekly payments are.
Okay. City Mortgage sends us this all the time. They say, guess what? For only $499, we'll convert you to a biweekly payment plan. What that means is your payment would come due every 2 weeks instead of once a month. Well, let's do some math. There are 12 months in a year, right?
Yes.
If I paid my payment twice a month, that would be 24, right?
Yes, another one I know.
But how many weeks are there in a year? How many weeks are there in a year?
52.
Ooh, good. 52 divided by 2 is?
I'm making 100.
Oh, 52 divided by 2 is?
26.
Ooh, she's still making 100.
I'm still got 100.
All they're doing is if they're making you pay it every 2 weeks, is you are paying 26 payments instead of 24.
We're smart, ladies. We are some smart people up in here.
So if you want to pay it every 2 weeks, do so. No problem. But don't pay for that privilege. I'm tossing those quotes up there again. Don't toss the option of paying bi-weekly out the window, but don't pay extra to have that option.
Also, someone asked if this is their first home, if they should start with a starter home. That's what we did. That's why we purchased a townhouse.
Guess what? When we bought that townhouse, I learned a lot about home improvement. I learned a lot about what I did and did not want in a home when we finally were going to go shopping for our second one. I learned about what I did and didn't want in a neighborhood. I learned
that I don't like everybody knowing my business up in here, especially like when I can't even, everybody knows what you're doing when you live in a townhouse community. There are no secrets in a townhouse community.
And paying off debt, but we'll never feel debt-free since we rent. Opinion? Well, what?
Yes, you are. What's hanging over your head?
You'll have a monthly responsibility for housing, but guess what? I still have to pay property taxes. I still have to pay electric and water and all gas, and we still have responsibilities every month. It doesn't mean we don't owe any money. Okay, simple as that.
Real estate agency had to choose.
What about real estate agent? Okay, realtors. I sort of feel like realtors I do about.
Lisa?
I feel a lot about realtors like I do about used car salesmen. There's some really good ones, and there's some really slimy ones.
Property taxes make me sad
to me,
too, Casey.
You go and you interview some realtors.
Oh, man,
you say, hey, I'm going to sell my house, and I know you're going to have a commission, and pretty much everybody's commission is the same. How are you going to earn it? Talk to me about how you want to sell my house. Walk through it with me, and tell me what you would do.
Lexi, sometimes it's
interview
harder
them.
If it's a friend.
Simple as that. And then, if you get a great feeling about them, and you're happy, don't go to church and say, do you know a realtor? Because they're going to give you somebody. That's great. But ask the questions of, well, how many houses have you sold this month? And how many houses did you sell last month? Or what about this year and last year? How long have you been doing this? What is it that you're going to do to sell my house?
You probably don't want a realtor that started yesterday that's never sold a home and doesn't know what they're doing.
Yeah.
Yeah.
This is a business transaction, not a relationship. Remember, you do want to trust them.
You don't have to even use a realtor. When we sold our home...
What saving reaches amount of mortgage would you pay off, even if it would drain savings? As long as you have an emergency fund, the answer is yes. I would pay it off, even if it drains you down to almost nothing, because then you've got no monthly payments and you can build it back up quickly. Now, if it's going to drain you to where you have nothing at all, then wait a month or two.
We actually sold our townhouse without a realtor. But yes, someone mentioned an ELP realtor, which you can find at DaveRamsey.com. But we sold ours just ourselves.
How long before you should consider refinance? After you've bought a house A couple years. I mean, there's some rules around it depending on the type of loan you have. The rates haven't changed all that much in the past several years. So honestly, if you're refinancing, my question is why? I mean, if it's a rate issue or if it's a 30-year to a 15, a couple years is fine. People refinance all the time. Is it better to buy from a real estate It is better to have a realtor if you don't want the mess associated with figuring it out on your own. I promise it is easier with a realtor.
It is easier because it was not easy to sell our home by ourselves. But
should we refinance to save 1%? If you're going to save 1% and if you're going to be in that house for at least another year or two, then yes, I would refinance for that because the math will work out to your advantage in about a year to 18 months depending on the loan type and depending on the financial institution. Do the math. How long 1% less, what's the payment now? What will it be with the different loan? And you'll find out that probably within a year, 2 years at most, it will balance back out. So,
should someone buy a house when they're in college? That depends on if you plan on moving.
Yeah. Are you in college?
If you're in college in your hometown, sure.
Yeah, if you're going to stay there, great, no problem. If you're going to...
It's hard to sell yourself.
If you're buying it as an investment or what... If you have the money, the same rules still apply. Be able to put 20% down, no more than a 15-year mortgage. Have no more than 25 or 35% of your take-home pay, depending on the number you're looking at as your monthly payment.
Don't buy somewhere where you're going to move away and then be a distant renter.
Yeah.
Or
long-distance landlord.
Yeah.
Yeah, you don't want to be a landlord to a place where you're not going to be able to just drive by the house and check out and make sure people aren't being crazy.
Someone says, is it common for real mortgage people not to accept partial payments?
It is common because they may want to take whatever, but if you don't pay them, the way that the contract is written is every month you owe them X amount of dollars, not X minus half or X. If you don't pay them that much every single month, then sometimes they'll stop accepting the payment at all. So what you can do is you can pay your entire payment or you can pay them nothing. That's just the way a lot of mortgages work.
Someone wants to know about buying in a
I want to
high
pay full payment
area.
plus extra. Absolutely. Pay your full payment and then write a separate check for principal only. Write that on the memo line for principal only and send them both in. And then make sure they apply it to the principal only, not to the future payment. They will take a partial payment if you tell them that it applies to principal only. Because you're not making a partial payment toward next month. You're applying extra toward the principal of the loan, which in other words, not the payments, but the raw amount, the base amount. There are a few mortgages out there where you can't prepay. Those are bad. There are not very many of them anymore. That's why I didn't even bring it up. So.
Hey, Tiff.
So always apply it to principal only.
Yeah, thanks to whoever answered your question too, Allie, because I already forgot.
Yes, if you pay it says, so the next month will it still be the normal month? Yes, because all you're doing is paying a principal payment, which means I'm lowering the amount of the loan. What you're doing is if you pay extra on the principal, when they calculate the interest next month, you're basically taking interest off the back end is how that works out. Are we a couple? That person obviously hadn't been here long. But that's okay. Yes.
We're married.
Yeah. Let's see this.
Do you like to kiss?
She put a ring on it.
I think that's a song. Does anybody else have any more questions? No, that's okay. We're jokesters. That's why we blog over at Humorous Homemaking, because we're humorous people.
We're trying to be funny. This is a serious subject, though.
It is a serious subject. There's hundreds of dollars at stake. Yeah, there's lots of money in this. Bye, Lisa. Have fun. I like your little girl's tutu.
Can I have some of that birthday ice cream?
I like your little girl's tutu, Lisa.
Should still be paying down payment when refinance. I think I understand the question. Yes, you should continue to be paying the payments as you refinance. Sure, absolutely.
Amira, do you have any questions? Did we not cover something that you wanted to know? We live in Virginia. Because Amira's the one who asked for it, but
that's what he's holding out. Any amount is good. When we were paying down our mortgage, remember, we had a 30-year mortgage when we first started out. We paid it off in 8. Every time we had extra money, I paid every extra penny that we could toward principal. And so, yeah, you don't have to pay a full pay. If you've got $10, toss it on the principal. If you got $1,000, toss it on the principal. Anything extra.
What about tax credit for first-time home buyers? Chocolate hearts are my favorite, Allie. Yes, we purchased this home debt-free with cash.
Yeah, we did buy the one we're sitting in now. We paid cash for it. Tax benefit for first-time home buyer. There are tax credits for first-time home buyers, depending on the kind of loan you get and all kinds of other good stuff. This is where a realtor can be really helpful, and this is where a good banker can be really helpful. I don't want to go into that detail because, again, it's so specific and it changes.
Yeah, every year.
And I don't honestly know all the details because normally if somebody asks me a question that's that specific, I go look it up because I want to make sure.
Shut up.
Simply because there's too many variables, and so it depends on all kinds of good things that we don't want to talk about. So, how long did it take to save up to buy your current home with cash?
9 months.
Yeah, what we did is we sold our other house, and we had the proceeds from that, plus the savings we had been building up in the interim, and we'd been looking around. It took us about 9 months.
What percent should you save to purchase a house?
Bare minimum, in my opinion,
20%.
Because that gets rid of the option, or the requirement, of paying private mortgage insurance, or PMI. Do you all have a good income?
We don't usually talk about our income, but we live in a low-income area. But yes, we.
I will tell you that our income is just slightly higher than the national average.
Yes. So.
We don't make a huge, enormous income. I work. She blogs. So
I work.
She absolutely works, taking home care of the kids and all that. But I'm saying I work a traditional job. She stays at home with the kids and does the blog stuff and all that kind of thing. So it's not like we have this huge income, that kind of thing. We are normal people, and I write about that a lot on the Humorous Homemaking blog, and talk about how you can get out of debt with a normal income, because it's not about income, it's about how you deal with it.
But that's
income.
Okay. Now it's time for you to start over. Way to go.
When 30%
homemade work. Shut up, Helen.
6 years.
And I can say that because Helen's my friend. I wouldn't just tell somebody I didn't know to shut up.
I just want to let you know that she sits at home watching soap operas and eating bonbons all day long while the children slave away like Cinderella.
Do you have to pay PMI when you refinance?
Depends. Have you covered 20% of a home's value? And if so, the answer is no. And a lot of people refinance to get out of PMI. That's one of the common reasons. But if you have a loan to value or LTV ratio of 80%, then you're good. Right now, bare minimum is 20%. Have one income. Should we shoot for 20 or 40%? 20% is the bare minimum. Anything over that's wonderful.
Yeah, because 20% is what you avoid your extra PMI
And that's the
payment.
exact reason that you're trying to have at least 20%.
So maybe we should say how we got out of our stupid PMI payment. We were paying PMI.
Oh, okay.
And then we had to get
we had to have a house appraised.
One of those, appraisals.
We paid
coming to me.
$400 or $500. We paid a few $100s to have our home reappraised when we were to the 80% LTV. But according to the loan, I think it was $400 and some dollars. But we were at a point.
I think it was more than that.
Maybe $600. Anyway, it was several $100s that we paid.
Private mortgage insurance.
Yeah, PMI is basically foreclosure risk
the
insurance.
The bank tax it on to your payment. So we had to have our house appraised. So, holler at me, Allie, and show me a picture when you get them. We had to have our house appraised again, and to prove to the bank that we had paid off 20%,
right,
in order to knock that payment off of that extra payment off.
Because according to the fancy things called amortization schedules, which basically says what your payments are going to be and how they're going to get applied every month, then we weren't there yet. But I knew, based on the home's value versus how much we had paid, then life's good. How do we sort out our money? We are behind on rent and have an income of about $900 a week. That's way too deep of a question to get into here, but if you will go onto humorhomemaking.com/contact, fill that out, and we'll talk to you. We'll talk to you about it, and we'll try to help you get sorted out with some budgeting tools and that kind of thing. Again, humorhomemaking.com. There's a contact tab up at the top. Just click contact, and you can fill that out, and just let us know what's up, and we'll try to help. How's that?
So if you guys don't have any more questions, I have a very important meeting upstairs with Candy Corn.
What?
And
we will talk a little bit about that, although you should go to catch.me
/ humor homemaking.
We talked about
all about college.
We talked about college debt a couple of weeks ago.
Up in here.
Are you going to make me lose my mind up in here?
That was from Mackenzie, and she's not even here anymore. But it tastes good with peanut butter, Helen.
So she takes candy corn, dips it in peanut butter, and eats it.
So, anyway, my name is Stacy, and this is Barry from humorhomemaking.com, where
I hope
we
that was
try to
helpful.
help you manage your home without losing your mind. So, thank you very much, Amira. And remember, no, we own it. So, remember, if we didn't answer one of your questions, you can find us here.
Yes, if you put 20% down, you will not have to pay PMI. That
Right.
is correct.
So, next week we're
Thanks,
going to...
Mr. Humorist. I've never been called that before.
He usually calls himself the husband.
Yes.
So,
I have been called Mr. Stacy before, which I thought was funny.
yes, that was interesting. Okay, so...
Okay, whatever. It's all good.
Yes. So, you guys have a good evening, and we will be back next week. I don't know what day, but not Tuesday, because Helen said that was bad for her, so we have to pick a different day.
Come on, Helen.
So, I will be back tomorrow at my regular time around 1:30 Eastern Stacy time, which is also known as Eastern Standard Time, but I renamed it for myself because that's just how I roll. And this has been a really long scope, and I'm so sorry, but I hope we were helpful to somebody.
30
And
minutes? 40?
oh, I don't know how long we were on here. Yeah, you heard your name. I said we couldn't do it on Tuesday anymore because Helen said she was busy.
And I said, come on, Helen.
So we can't. And tomorrow I have absolutely no idea what I'm scoping on because I got distracted today and I can't remember what I said I was going to do. But I'll be back tomorrow around 1:30 to do something that I can't recall right now. So I'll see you guys tomorrow. Until then, I'm Stacy at humorhomemaking.com, and this is the
Barry,
husband
the husband
at humorhomemaking.com. And remember that in the walk of life, it's only too late if you're
dead.
Thank you. Oh, the catch link is catch.me/humorhomemaking, not humorous, just humor homemaking.
And it's the American English spelling of humor, Humor.
Yeah, because we live in Virginia.
British English, come on. A lot of people are real concerned about that. I have to deal with international people. Come on, cut me some slack.
Okay, see you guys later. I have a meeting.